Hello, this is Mitch King with TradeStocksAmerica with the Tuesday evening daily stock report. It's the December 16th. This is a look at Dow Jones after a 4.2% rise today after they lowered interest rates by 75 basis points to 0.25. They used new language and said that they have a target rate of 0 to 1/4% on the Fed funds rate. Their idea is to help lower the variable rate on interest rates or home equity loan line of credits to stem the future foreclosures, as well as lower rates on auto loans, credit cards, as well as to spur some purchases of housing because of mortgage rates going down, and to increase liquidity by buying up to $600 billion of collateralized debt obligations. Those are the investments that the banks primarily hold that has caused so much problem with the leverage of 30-to-1 or 60-to-1 that got them in trouble. Let's look at Dow Jones. We're still within that channel upwards. It's a real gentle, shallow uptrend. We might open down a little bit. It looks like the futures are down, showing it'll open down 90 points. The Dow is up 359 today. The financials really did the big job, and let's take a look at some of those. This is the NASDAQ Composite Index. We've drawn the same channel. It's had a sharper run up today of 5.4%, which you can see right here. 5.4% gain on the NASDAQ Composite today is quite excellent. It looks like we're looking good, and this is the way you look at an intermediate type of trend when you're evaluating a stock or an index, in addition to the fact that you're looking at some of these technical indicators like the MACD right in here in the red and green. Looks like we're pointing up. You can see this older trend line that we drew quite some time ago, and now we're breaking through that. This is still a counter trend within a bear market. We have to assume that until a much further rise occurs. I'm sure let's take a look at the S&P 500. It should look about the same. And here's the S&P 500. Same type of pattern here. Let's take a look at the financials. Wells Fargo was real strong today. Went up 14% right here. Still within that same pattern that we've been looking at. That's the pattern that we are looking or trying to look for when we're long a stock for a period of weeks and potentially months. The market's feeling stronger and stronger, a lot more bullish signs, and I think we definitely got the floor in on the market as far as a support level. I don't think market's going to go crazy on the downside like we saw in the last several months from especially October and November. Here's FXI, the Xinhua 25 China Index. We're in that nice narrow gradual uptrend within this channel. Big day today of 7.3%. We wanted to see this stay within here. And let's take a look at the others that we've been following, and hopefully you're long on the intermediate trend. PTR, same type of look here on PTR. So far, so good. S&P, those last two are oil stocks. Oil is trying to bottom and move up here. We hit a high today of $49, $49.10. Remember, we got below 40 just briefly about 8-10 days ago. So as oil moves up, the last two stocks will move up. I think China's sector is, in addition to this, also looking strong too. The steel sector is starting to look good. You can see the fast-moving average here on the blue line starting to move up real nicely, kind of gently. I wasn't quite sure about it, but it's still being supported. The official buy signal on these charts could be when the fast-moving average, which is this blue line, crosses from low to high on the red. But I tend to look for a flattening of the moving averages and some other indicators pointing up and buy at a lower price. It's higher risk, but a higher return. It looks like we're getting a lot of these commodity sectors starting to turn up. So let's take a look at a couple other steel stocks. AKS looks the same there. And Schnitzer Steel. These are just three examples of many stocks in that sector. Here's the large cap oil stocks. Here's ExxonMobil. Real shallow, gentle move up. But as oil moves up, this is going to start to continue to move up. There's a nice dividend with this. I'm not sure what it is right now. It depends on what price you are. But there is a dividend that's pretty decent here. Probably about 3.5, 3.3% on this. but I haven't looked at that lately. Look at that move from as low as $58, $57, now $83 with a large company like ExxonMobil. Let's take a look at Chevron, Texaco, same pattern. We're on an gentle uptrend. Looks like these are going to benefit. I think this is worth a little bit of money along with the steels and the intermediate trade positions of FXI and PTR, S&P. They should have a little money long on that as well. Let's take a look at Rambus. Is not a purchase. This is a watch and wait. This is still on a nice bull run. Just the beautiful looking V bottom. I missed this. I talked about it a couple weeks ago or more. Forgot all about it. The life insurance companies are starting to look good. Here's Hartford. Here's Prudential, MetLife, Lincoln National, real shallow one. Principal Financial Group. Let's take a look at the coal sectors. FCL, this deserves a little bit of money to go long. Real shallow move. Real shallow looking moving averages. And MACD. ACI should look about the same, with JRCC probably a little stronger. Massey Energy, not so strong. CNX still hanging in there. Let's look at a copper manufacturer. FCX was stock that came from 112 to all the way to $16 here a couple weeks ago, and now we're moving up nicely to $25. Still ahead. Look at that. The fast moving average hasn't even crossed the 30 days. The 10-day moving average, what I've got on the light blue, and 30-day on the red, and it hasn't even crossed yet. So we got some more upside on this one. Want to bring up Intel, starting to turn up here and looking positive. I'd let this maybe a small pullback before you start going in. Let's take a look at that CPE trade that I pointed out yesterday. This could get into $2 and give us potential profit on this. I shorted this earlier today. Drop and pop has not dropped so much. These ones just pretty much popped for the open, just moved on up all the way from the opening of the regular market. I look for a little more drop and a nice pop on Amazon, RIM, and First Solar. Apple, I took off that list, has got a downgrade. Steve Jobs is not going to Macworld himself, so they're concerned about his health again, probably that rumor coming up. I think this is time to be a little more aggressive and put some money to work on these intermediate moves that could last for weeks or possibly a couple months. Don't get too leveraged in any one sector or one stock. Keep a trailing stop on those intermediates for sure. This is the absolute best time or technique to use trailing stops. You guys take care, and we'll talk to you tomorrow.